Good morning and welcome to Bazaar Morning Call. I am Anuj, with me, Prashant and Sonia. We are starting the penultimate day of what's been a very treacherous series. It started on such a good note, but is ending on such a poor note because of what's happening globally. And once again, for our market, there will be a 200-day moving average test, which the market's been sort of, just passing for the last couple of days. But this morning, the global risk off once again is just way too high. The dollar index is continuing with its strength as we speak. It's the highest point, at the highest point of the last 20 years, 114.56 now as we speak. And India is finally participating in this global risk off, something which it avoided for better part of the last 1 month. And we are set to open below the 200-day moving average of 16,990. And the big question is that, does this mean that we now start to participate as much on the downside, or is our outperformance going to remain intact? That, of course, is the big question. SGX Nifty indicating a big gap down, 180 points down now. 16,855. Morning.
Hi, morning. You think it was the word decoupling that ruined it for us? The minute people started saying India is decoupling, bam, here it comes, right? The fall in the market. But I mean, jokes aside, it hasn't looked good at all globally, as well as Anuj was saying. 6 straight days now, the US market's under pressure, and the Dow was down quite a bit yesterday too. The S&P 500 has now hit a new low for the year, so it's officially gone into bear market terrain. The 3600 level was also quite keenly watched. It's almost there. The SGX Nifty not looking good. Asian markets are also under pressure as we speak. So the Nikkei, last time I checked, was down about 250 odd points. And so far in September, we've sold FIIs, that is, have sold about 10,300 crores. So it's been quite hectic as far as the outflows are concerned. You know, the big question, right, Anuj, I mean, something we've been talking about for a while, at a time when the dollar index is near a 20-year high, when FIs are selling, not just in our own markets, but world over, is there any place to hide? I mean, India was so far a safe haven, but that doesn't look like the case anymore. You know,
Sonia, obviously that is the case, but we are still outperforming. Even we're falling less compared to the globe. And I'll still maintain my view that normally when you have May-June correction, then a rally, and then in September, October, the market gives you a move back towards the lows. Anecdotally, those lows are not revisited. I think we're going through a phase of flushing out of excesses, and I mean, if you build portfolio in perhaps this decline, this will be going forward. With benefit of hindsight, 1 year down the line, you'll realize that this was perhaps that buying opportunity. But right now, we're talking about near term. So in that sense, of course, yesterday's market action was clearly quite weak for the bulls. Sell on rally got firmly established yesterday. The market gave 2 rallies yesterday, and both were sold into. It's just that because of some programmed trades right at the 200-day moving average, we saw some buying yesterday. But the sell on rally is intact now till you reclaim the nearest moving average, which is the 5-day exponential moving average, which comes in at somewhere around 17,250. 17,250 technically is also a very important level. Above and beyond, below this, the markets have made some decisive moves. So that's why this becomes significant. I think for me, the bigger worry is what's happening to the Bank Nifty, because remember just 5 or 6 days back, the Bank Nifty hit an all-time high. And from all-time high, it's corrected about 8% in a matter of last 5 days. So I think this is really very interesting because IT might, just in the near term, might stay resilient because of currency, because we are heading into earnings. Nasdaq did well. So the Bank Nifty is beginning to fall more. And that, I think, might be a trade which might continue, the algo trade, because of what's happening. The Bank Nifty, in fact, is still 2,000 points off its 200-day moving average. Now, I'm not saying that we go there. But what I'm trying to say here is that because it had such a massive outperformance, the risk also becomes bigger on the Bank Nifty. There's expiry tomorrow, so you expect some kind of momentum, which is clearly visible now. So let's see how things move. This FI selling is now approaching $2 billion for the last 5 days, and this was the fear that the ETF buying, which propelled our markets in last month, is it deserting us because the momentum has been lost? So that's something to find out. I think the cue to watch is the USD INR. For the equity markets to stabilize, for this algo trade to go, which is self-financials, you need to see some stability in USD INR. It doesn't need to go back to 80. It doesn't need to, strengthen a lot. It just needs to stop falling. Right now, we're falling like 9 pence on the currency. And when that happens, obviously the equity markets also suffer. So that's another reason that, we are seeing this kind of decline.